and welcome back to Coffee Infused Crypto. Just like a beautiful bouquet of flowers, which is better not to consist of only one type of flower. So the more tulips and daisies and all of the other types of flowers in a bouquet, the beautiful it is, the more sources and resources we have in analyzing the crypto market, the more solid we are. So technical analysis is one part, but today we're gonna focus on a different aspect, and for the next 9 episodes we're gonna in total it's gonna be 9 episodes. So we're gonna deep dive into on-chain data or on-chain metrics. So you hear a lot of on-chain stuff here and there, but what are they exactly, how to look at them, and how to add them into your belt of knowledge. So the way I like to do it is technical analysis, news outlets, which you can access technically anywhere, market sentiment, and last but not least, definitely not least, the on-chain metrics. So grab your cups of coffee, make sure you follow us for the episodes to come. This is gonna be in a new playlist on the channel called the on-chain metrics or on-chain charts, or we'll see, on-chain something. I'm gonna create a playlist for it. So to start off, we're gonna take a look at CoinTalks Crypto. This is the Bitcoin Bull Run Index. So this is a bunch of on-chain metrics, which gives us a score at the end of the day of where we are from a top or a bottom based on different numbers of different metrics. So now our score on the April the 6th would be 26, where the least score would be 1 and the highest score would be 100. So we're at 26, and the 9 on-chain metrics, which we will discuss one by one each in an episode, would be the Pi cycle top indicator, the RUPL NUPL chart, the R-HODL ratio, the Puel multiple, the 2-year moving average, Bitcoin Trollololo trend line, MVRVZ score, reserve risk, and the Woobull top cap versus CVDD. So don't get over confused. It's okay. We're gonna break them down one by one, and I'm gonna make it as easy as it gets. So just enjoy your coffee and let's start. First thing I want you to notice in this chart, which is a combination of all of those, if you notice, but again, we get back to the conclusion at the very end of the video, of the 9th video, after we go over all of them. But the things I want you to take note of now is the score is in the black line, okay, of all of the 9 indicators, or all 9 indicators. This is the average of them, it's in black, and the price of Bitcoin is in this rainbow color. The rainbow color is blue at the very depth of a bear market, or at a lowest point in a bear market, and ranges all the way to dark red at the very top of a bull market, and this is the rainbow spectrum. So the lowest point of the index was at this bottom. We had a confidence of 9. At this bottom in 2015 we had a confidence of 1. At this bottom in 2018 we had a confidence of 2, and of course they're correlated with the blue bottom, and now we had a confidence of 2, and coming up from that to where we are today at 26. Meanwhile, the top of this cycle here, we had a confidence of 99. Top of this one we had a confidence of 100, and the last one we had a confidence of 83 on the first run, and the all-time high we had a lower confidence. That's what made people sure that this run here was just a 3 months of FOMO, or a blow of top continuation, where people thought that we're getting to the moon. But all the on-chain metrics were too damn high here for us to be sustained, and this is the power of knowing and having on-chain metrics in your belt or under your belt. So let's turn everything down. Let's just focus on the pi cycle top indicator. This is only one out of the 9 indicators, and this is a 39% at the moment. But what is a pi cycle top? So let's deep dive into this indicator, and yeah, next episode would be the next indicator, and then at the end of the ninth we'll do a full conclusion to this series. So the pi cycle top indicator relies, first of all, you need to know it relies on the daily 350 daily moving average and the 111 daily moving average. So 350 daily, 111 daily, those two moving averages. And it's calculated by this formula, where the price of the 350 daily moving average, so the price in US dollar at any 350 moving average area, would be multiplied by 2, and the moving average, the 111 moving average, would be at the current price of the US dollar of it. So don't worry guys, I'll break it down to you on charts, and you'll understand exactly why this is called the pi cycle top indicator and how did it perform throughout history. So as we said, this has been very accurate in indicating tops of cycles. So why is it called pi? Because simply when we divide 350 over 111, which are the moving averages we use in this indicator, the result would be 3.153, which is very close to the pi of 3.142. So in fact, it's the closest we can get if we want to just divide the full or whole numbers. So that's why it is called the pi indicator. So how accurate is the pi indicator? So on chart, this is the full Bitcoin price in black, and the pi indicator, which is the, as we said, 350 day moving average times 2, which is always in dollars here. We're taking the final value of that. And the orange line would be the 100 daily moving average price at a current point. So how does this work? Let's go back in history and check. So let's take this incident, for example. So here we are, this incident. Let's see. So if you notice here, the pi cycle, or first let's have a general look. If you notice, the orange is technically always below the green because it's a 111 day moving average. Technically, it's lower than the 350 times 2. So green should always be on top. But as soon as the orange starts catching up, and you can see the pattern here, and touches, usually that would mark an area where we're very close towards the top. And as farther they are apart from each other, as in gaps here, that usually indicates that we are closer to a bottom than definitely to a top. So if we go back to, now that we discussed that, so let's go back in time and check this indicator in recent or since the beginning of time, and how did it perform. If you notice here, we have a very fine dotted orange line. So if you look at this area, you will find it. So that is the line when the orange, which is the 111 day, crossed the green, which is the 350 times 2. So that was the area where it crossed, and that happened on let's see, May 13th of 2011. Okay, so that happened on May 13th, and the top of that run happened or was hit on June. January, February, March, April, May, June. So less than a month later. So because that's June 10, that's June 13, yeah, less than a month we witnessed a top. Now it crossed here, orange over green here, didn't last too long. We witnessed a top, and then price went down until orange broke down back and went to be lower than green. Next time it crossed it was around this area, or let's say let's try to take those two areas together. So let's take this and this one. So next time we crossed it was this area on April 5th, 2013, the orange line if you notice, and the local top here was on April 8th. 3 days later we had this local top, but this was a bull run. So we had the local top here at 3 days after the cross, and then we retraced in price. Next time it crossed was in December 1, 2013, and that was only 1 day after we had the local or all-time high back then. So here started to shape up. 3 days after, or yeah, 3 days after a local top, 1 day after an all-time high. Okay, let's move on. Around this area, here we crossed, orange crossed green when we were let's go, yeah, December 18, 2017, and the local all-time high here was, let me try to get it right, was December 17. That was at the almost the same date. As soon as we hit the all-time high, we had the orange crossing green. Okay, that was the 2018, and here recently, last but not least, of course, let's move to this area. We crossed it on April 14, 2021, maybe before. Yeah, April 12, 2021. And we had the high on April 14. So 3 days before the old local high here. And again, that was the last all-time high, and it was 3 days before we hit the all-time high. So that's how powerful the SPY cycle indicator is. It's based on a formula, and that formula is based on moving averages, and moving averages are based on price, and price is based on buy and sell power, and buy and sell power are based on fear and greed of human nature and sentiment of the market. So it's a chain of things that make sense. And currently we are here. So currently notice the gap between orange and green. So this is where we are, still way too far from even approaching green. So if we want to take a bigger time frame or bigger look so that we can compare, okay, so here we had this this moving orange line going apart or separated from the green, just as here we had this separated from the green and going, you know, to the downside. And only here, if you notice at the very bottom, I know we have this price action, which is always, so I want you to look at the orange line. Notice at the very bottom where it started curving to the upside, right? So it started curving to the upside. Meanwhile, the green line on top, because it's a higher frame moving average, it still went downside for a while. So we started curving around this area on March 21 of March 2019. So March we started curving, and the green line or moving average kept on going down and only started curving in June. So yeah, that was March all the way until June, until this moving average, the green one, started curving to the upside. Here, if you notice, let me go up, orange again. We started curving in January, started moving to the upside, whereas our green line is still in a downtrend. It's very similar to this area. So this area, the price was moving higher, right? The orange line or the 111 days was moving up, while the green was still coming down until it started, you know, moving to the other direction. So this represents this area relatively, or in shape of or in a similarities of those moving averages and the price action and the curvature of those moving averages. So that's how we kind of relate that we were definitely in an uptrend at this area, and we were definitely starting this massive run to the upside, which ended up in both lines at the end of the day meeting up here, marking the top. But that was only like, that was 2019, and they met in 2021. That was 2 years later. So we had this curvature, and after we had this curvature here, those next 2 years were very good, right? 2 years later, everyone was happy. People who bought here were definitely in a very good position because they had a very, very good 2 years to come. So those are the main conclusions that I get from the pi cycle top indicator, which tells us we're still way from the top. We're nothing near the top, and this is only one indicator. If you want to know more about this indicator, you can always go and check. So this would be more information, of course, about it, and do your research about it. So if you want to put it based on only this indicator, based on our price now, you notice we're going up to 39, okay, the confidence based on this indicator alone, and 39%, whereas at top it had a 100%. This top it had a 99%. This top it had hit 100 here, it hit a 99 here. So yeah, we're still way too early. Even when we had this run up here, which didn't form an all-time high, it went all the way up to 78. This up here went all the way up to 66. Yeah, 66 here. And this up here went, this continued. So yeah, this continued. This was coming from a downtrend, so we can't count this. So yeah, from a similar scenario here, since we started at the very bottom of 1 here, and here we started at the very bottom of 0. So we still have a long way to go at minimum 64 or 65 or 66, or even if we want to go even lower, we have like the 50 areas. But again, we're not even close to the 50 areas. We're still at the 39. So we have a lot of room to go on this indicator alone. So guys, that's everything for today. Catch me tomorrow so that we can discuss the other indicator. And yeah, this is gonna be a series. I hope you enjoyed this one. I hope you enjoyed the dive of on-chain metrics. See you tomorrow. Take care. Bye bye.